Retirement may seem far off, but it's never too early to start planning. As Warren Buffett wisely said, someone's sitting in the shade today because someone planted a tree a long time ago. And when it comes to securing your financial shade for retirement, Fidelity Index Funds offer a solid foundation. But how much do you actually need to invest in these funds to retire comfortably? In today's video, I'll show you and John how much you and John need to invest in the top 5 Fidelity Index Funds to retire. I'll show you how to reach the $2.5 million portfolio value. In the end, I'll show you a Fidelity fund that will not only help you retire, but also provide a luxurious retirement with over $60,000 in monthly income. Before choosing which fund to choose for retirement investment, you need to know how much money is enough to retire. To figure out how much money you'll need for retirement, start by thinking about what you spend now. On average, in the U.S., one person spends around $3,400 each month, which adds up to around $40,800 a year. This covers things like housing, getting around, food, and healthcare. But remember, things will get more expensive over time because of inflation, so you can't count on $3,400 being enough for the rest of your life. As time goes on, you'll need more money each month to cover your expenses. Let's say we look back at the past 10 years and see that prices have gone up by about 2.65% each year. That means in 30 years, you might need around $7,000 each month or $84,000 annually. To further simplify things, basically, you need around $2.5 million by the time you retire. Coming up next is a list of Fidelity Index Funds arranged in such a way that each requires a smaller initial investment than the one before it to reach the $2.5 million goal. Starting at number 5, we have Fidelity Freedom Index 2060 Fund, Investor Class. Known by the ticker symbol FDKLX, the index fund is a target date retirement fund designed for investors who plan to retire around the year 2060. Managed by Fidelity Investments, this fund adopts a life cycle investment approach, gradually shifting its asset allocation from aggressive investments towards more conservative choices as the target date approaches. The fund's history reflects Fidelity's commitment to providing a mix of domestic and international equity index funds, bond index funds, and short-term assets, aiming for a diversified and balanced portfolio. It has a current dividend yield of 1.88%, backed by a moderate dividend growth rate of 5.33% and an average annual growth of 4.95%. To achieve the target of a $2.5 million portfolio with this fund, John would need an initial investment of $340,000. This investment after 1 year would appreciate to $363,222. Over 10 years, it would grow to $660,285, doubling the initial investment. And in 20 years, it would reach $1,291,180. After 30 years, the fund would close at the final goal of $2,543,080. In total, this fund would add $1,563,908 in capital appreciation and $639,172 in reinvested dividends. This fund aims to help people who plan to retire around 2060 by investing in different Fidelity Index funds. It tries to grow your money over time while also giving you some income. As you get closer to retirement, the fund becomes safer by investing in more stable things. The fund invests in many types of businesses and bonds to spread out the risk. It usually includes big American companies, stocks from other countries, and government and company bonds. This fund is good if you want to invest for retirement without having to do a lot yourself. It's managed to be safer as you get closer to retirement and is a good choice for people who plan to retire around 2060 and want a simple investment option. Next up, at number 4, we have Fidelity U.S. Sustainability Index Fund. Known by the ticker symbol FITLX, this index fund prioritizes companies with strong ESG, environmental, social, and governance ratings, aiming to balance ethical values with financial returns. ESG criteria assess how companies handle environmental, social, and governance issues, helping investors align investments with their values. The fund has a current dividend yield of 1.07%, supported by a good dividend growth rate of 10.36% and a solid average annual growth of 8.5%. These numbers show its focus on both capital appreciation and dividend growth. To attain a $2.5 million portfolio with this fund, John would need to invest $148,000 initially. After 1 year, this investment would be valued at $162,164. Over a decade, it would grow to $372,313. And in 20 years, it would reach $956,915. After 30 years, the fund would achieve the final goal of $2,523,582. In total, this fund would add $2,002,506 in capital appreciation and $373,076 in reinvested dividends. This sounds promising. Reaching $2.5 million with only $148,000 is impressive. However, most of us don't have this amount of idle cash. Not to worry, in the end, I will show you and John an index fund that will significantly reduce the required capital to less than $15,000. Back to FITLX, the fund's history is tied to the growing demand for responsible investment options, with Fidelity leveraging its expertise to provide investors with a product that aligns with their values without sacrificing performance. Risk factors for this fund include risk associated with the ESG screening process, which may exclude some sectors or companies that could potentially offer higher returns. Additionally, the fund's focus on sustainability criteria means it may behave differently from more traditional equity funds during various market conditions. This focus on sustainability does not preclude the fund from seeking growth, as it includes companies believed to have a competitive advantage due to their responsible practices. At number 3, we have the Fidelity 500 Index Fund. Known by the ticker symbol FXAIX, this index fund is an excellent investment option for retirement, particularly for investors seeking a low-cost, efficient way to gain exposure to the U.S. stock market. It has a current dividend yield of 1.4%, supported by a strong dividend growth rate of 12.11% and an impressive average annual growth of 10.29%. So the fund is both capital appreciation and dividend focused. Here's the breakdown of how much John would need to invest. To reach a $2.5 million portfolio with this fund, John needs to invest an initial investment of $82,000, which after 1 year would appreciate to $91,586. Over a decade, it would triple and grow to $250,400. And in 20 years, it would reach $785,439. After 30 years, the fund would achieve the final goal of $2,543,954, providing an annual dividend of $53,341 or approximately $4,445 monthly. In total, this fund would add $2,046,531 in capital appreciation and $415,423 in reinvested dividends. Since it started, this index fund has stuck to its goal of copying the S&P 500's performance, making it popular for those who want a basic stock investment. Its performance is closely tied to the return and dividend yield of the S&P 500, offering a transparent and efficient investment option. Risk factors include market risk associated with equity investing, particularly in large-cap stocks. While the S&P 500 index is diversified across sectors, the fund is still subject to fluctuations in the overall market. This broad exposure ensures that investors benefit from the growth potential of the U.S. economy while maintaining a diversified portfolio. At number 2, we have Fidelity NASDAQ Composite Index Fund. Known by the ticker symbol FNCMX, this index fund replicates the performance of the NASDAQ Composite Index, providing exposure to over 2,500 stocks listed on the NASDAQ Stock Exchange. It has a current dividend yield of 0.64%. FNCMX shows a robust dividend growth rate of 14.76% and an exceptional average annual growth of 13.57%. To achieve a $2.5 million portfolio with this fund, John would need to invest $45,000 initially. After 1 year, this investment would be valued at $51,395. Over a decade, it would quadruple to $170,451. And in 20 years, it would reach $650,442. After 30 years, the fund would reach the final goal of $2,502,894. In total, this fund would add $2,314,906 in capital appreciation and $142,989 in reinvested dividends. The history of this fund reflects Fidelity's expertise in index fund management, offering investors an opportunity to participate in the dynamic and fast-growing sectors of the economy. It's directly tied to the NASDAQ Composite Index, which is full of tech companies. This can mean big growth, but also more ups and downs. The focus on tech and biotech makes it great for people who want to invest in innovative companies. But remember, these sectors can be risky. The fund is more likely to go up and down compared to others that spread out investments more. If you're okay with more risk for the chance of bigger returns, especially for retirement, this fund could be a good fit. It's best for those who think tech and biotech will keep growing over time and want to invest in them for the long run. And now, finally topping our list at number 1 is the Fidelity Multi-Asset Index Fund. Known by the ticker symbol FFNOX, this fund has a high current dividend yield of 3.17%, along with a strong dividend growth rate of 13.77% and a lower average annual growth rate of 4.44%. These figures suggest it leans more towards dividend growth. Before showing how much John would need to reach the $2.5 million mark, let's see why this index fund is at the top of the list. This index fund provides a diversified investment solution by allocating assets across a mix of equity and fixed income index funds, meaning this fund is designed for investors seeking a balanced approach to investing, with exposure to both the growth potential of stocks and the stability of bonds. This diversified approach is used to reduce investment risks by spreading investments across different asset classes and sectors. Its holdings include a wide variety of equity and fixed income index funds, providing broad market exposure. This helps to buffer against market volatility and offers a balanced approach to asset allocation suitable for long-term investment objectives. All this means it's a solid long-term dividend-focused index fund. But how much would John need to invest? To reach the $2.5 million portfolio with this fund, John would need an initial investment of only $13,000, which after 1 year would appreciate to $13,989. Over 10 years, it would grow to $31,708. And in 20 years, it would reach $144,015. That's where the strong dividend growth will take charge. And after 30 years, the fund would achieve the final goal of $2,563,593, providing an annual dividend of $736,767 or approximately $61,397 monthly. In total, this fund would add $310,251 in capital appreciation and $2,240,342 in reinvested dividends. And with this fund, John would never have to sell off his investments and would still have more than enough to enjoy a luxurious retirement. Turning $13,000 into $2.5 million is only possible using DRIP, or to be more specific, the Dividend Reinvestment Plan. To learn more about it and add an extra $4 million to your investment, watch our video titled The Power of DRIP: Maximizing Dividends Through Reinvestment.